Now, help us understand, Sharadji, when it comes to understanding, the key pockets to really look at in terms of valuation as well. Why I ask you this question is that what I started off with, last 6 weeks have been a consolidative phase. In fact, this year so far, out of the 8 months, most of the time markets have either been volatile or in a consolidative phase. We have, come off the peak as well. Valuation wise, do you find any pockets where, risk reward has improved, where investors can actually find the best time in hindsight, say a few years down the line when things are settled, we may be much higher than where we are. So looking at this phase as consolidative, how would you look at those pockets of value to be seen?
Yeah, I think those pockets will emerge obviously over the next 3 to 5 years, which aligns with the broader India story. So I think banking is a no-brainer that should do well. Right now, there is a lot of nervousness regarding how much money is moving into mutual funds, etc. But I still think that it's not very material, and banking as a sector would continue to do very well. The MSME side of the demand should be very strong. The learning curve on microfinance has been very strong. How they evolve and how they get out of that, I think that is something that we need to look at. So I think banking is one sector that will continue to do well. In terms of typical valuation comfort, I think, yeah, paper is something that we are comfortable. But broadly, to take industry calls would be very difficult. I think it's better if you take, a bottom-up approach and take stock-specific calls, because generally, per se, the whole industry turning out attractive is not something that's happening across the board. Like within insurance, insurance is a long-term theme. We are very bullish. But in the medium term, 1.5, 2 years, maybe most of the private insurance companies might be fairly to fully valued. Similarly, healthcare as a sector, long term, we are very bullish. Real estate as a sector, long term, we are very bullish. But within real estate, I think the pocket that looks more attractive to me is the second rung stocks or the third rung stocks. Basically, they seem like an attractive pocket. The likes of Signature Global, Keystone Realty. There's one more small stock, Shigam Properties. I think these are good ideas to look at. But I think generally, if you want to pinpoint sectors across the board amongst the frontline sectors that look attractive in terms of valuation, I think maybe IT is something you can look at. But rest of that, I think it should largely be, a pick and choose kind of approach, where some disappointment gives you an opportunity to make a fresh entry point. Like we are recently looking at a PG Electroplast after this correction. I think it does look like a decent buy, because the long term, air cooling part is not going anywhere. So that could be a good contra bet you could look at long term wise. And even the whole cooling space, though valuations as such are not very attractive there across the board. Maybe a Symphony looks attractive in terms of valuation, but not the typical AC makers. And I think, yeah, paper is something that we have spoken about in terms of valuation comfort. So IT and maybe, the likes of, say, Praj is something that you could look at. I think it's seen a lot of correction. Uh, I think that looks like a decent bet if you're looking to hold on for 2.5 years. These could be ideas that could fetch you 50-60% from current levels very easily.
If you like the video, do like, comment, share and subscribe.